Looking to raise your credit score quickly? The fastest way to see a jump to your credit score is to make sure that all of your revolving credit cards are not maxed out. Ideally, you want to have each individual card's balance below 10% of that card's limit. Believe it or not, you don't want to pay a card off to zero to get the max scoring points. Remember, the scoring system is rating your credit usage and availability, and having a zero balance means that card is no longer factoring into the equation for utilization. It's kind of crazy for sure, but that's how it works. So if you can't get the cards down to 10% of their limits, the next ideal target would be 30%. Once you go over 30% usage, you start losing points. And the closer to being maxed out on a card that you are, the more points you'll lose. The good news is that these points come back almost instantly. So as soon as you pay off a card, say this month, those points should be back on your score the following month or at least the month after. Remember, creditors only report to the credit bureaus once a month. So if you make a payment after your statement ending date, it likely won't get reported to the credit bureaus until the following statement ending date. If you're paying off multiple cards, simply start with the smallest balance first. There's no advantage to paying off a larger balance first. They all report to the same in the scoring model. So a $500 limit card with a $100 balance counts the same as a $5,000 limit card with a $1,000 balance. It's simply percentages. Also, if you have multiple cards with balances and cannot pay all of them down, that's fine too. Just pay off the smallest ones first and keep going up from there. We can run a new credit report once we know the statement period has ended for the last card paid off and should see your higher scores right away. Reach out with any questions on getting your score higher before you apply for a mortgage.